That's right. One of our favorite segments. We are back in the studio with an expert and a community member who has submitted their portfolio to get the thoughts from our expert. Adam Dawes, welcome to the studio.
Great to be here, guys. It's fantastic.
Always a pleasure. And on the line, we have Lucas. Lucas, how are you going?
Yeah, good, thank you. Massive fan of the show, so absolutely rapt to get through.
Well, thank you for submitting. We appreciate the support, and hopefully Adam can give you a few ideas today to help improve the portfolio. So Ren, as always, do you want to take it away?
Yeah, so Lucas's portfolio, I'm going to split up into a few different buckets. About a third of the portfolio is core index tracking ETFs. Then we've got about just shy of 20% of the portfolio are thematic ETFs. So just shy of 60% are either core or thematic ETFs. Then it gets a little spicier from there. We've got about 6 or 7 individual stocks, which is about a quarter of the portfolio. And this is one that I'm interested to get Dawes's perspective on. 12% of the portfolio is in crypto, including a Bitcoin ETF. But then finally, Lucas, 13% of the portfolio is in cash, which I imagine Dawsey will have some ideas on how you can deploy. So, Dawsey, before we ask Lucas some questions about the portfolio, we like to get a nickname.
Yes.
Have you got one for Lucas?
This portfolio is a very good portfolio, Lucas, but it is a galaxy far, far away, and we're going to call it the Star Wars portfolio for George Lucas.
Okay.
Okay.
Nice. George Lucas, there we go. Works on a number of levels.
There you go.
So, Lucas, how did the portfolio come to be? Give us a bit of the story.
Yeah, so look, I've been investing since I was probably, I'd say 12 years old, investing dad's money in anything with a cool ticker. So losing pretty much all of that. And then obviously as I got a bit older, I started listening to you guys, started reading a few financial books, and decided to dollar cost average and get into a few individual stocks that I really liked. Recently, I had to sell down a lot of my stocks just for a house deposit. So at the moment, it's a bit of a mess. So keen to get Adam's thoughts on how to rebalance it and restructure it.
All right, then. Well, look, I mean, Lucas, it is a fantastic portfolio as far as that you've got a good smattering of individual stocks, thematic ETFs, as well as then those sort of Vanguard diversified high growth index ETFs, or those sort of big ones. Just run me through why you've got the VDHG inside of a portfolio of another sort of 15 stocks.
Yeah, sure. So that was actually my first ETF that I ever bought.
Okay, that makes sense.
And that was my staple of dollar cost averaging into that. Okay. So that kind of market share of my portfolio got quite big. So that was one that I did sell down recently as well.
Yeah. Okay.
But I do notice there is overlap between that and a lot of the other ETFs I have. So that's where I just want a bit of help restructuring it all.
People with small balances, a VDHG is fantastic, right? Because it covers all of your bases. It's perfect. But if you've got a larger portfolio and you've got all these other individuals in there, I think it's a bit of a waste of time for you to have that, because you are too diversified, and you know, it's got bonds in there and all that kind of stuff, which you can probably do yourself if you really wanted to sort of step it out a little bit more. So I think overall, I'd be sort of moving away from that. I don't think you need to have that in the portfolio. You've got some smaller stuff, Weebit Nano, which has obviously been a really good one, but now not so good. And then you got Macquarie and Fortescue, which, you know, fantastic sort of big, you know, large cap businesses as well. I think with a rebalance, what you want to be doing is looking at the individual sectors. You've got US, you've got Asia, and you've got Europe. So I think you're doing quite well. Maybe a VEU, so like an all-world one to capture all of that kind of stuff, I think is probably pretty good. And then just walk me through the Bitcoin. Are you just doing that?
Why not?
For the fun of it?
Bitcoin, we just don't know you, Adam.
It's working. But anyway, keep going. Yeah.
The Bitcoin was just it's just a dollar cost average type thing. Kind of set and forget, just leave and see what happens. Set and forget, and just is what it is. I just I invested in Bitcoin and Ethereum, so those were kind of my main two that I just
right. Okay.
A couple hundred in that, and that's it.
So Adam, I just want to pick up on what you said earlier, because a lot of people will probably be like, oh my God, am I wasting my time with VDHG?
There's a lot out there.
Yeah, so
in
when
the community, definitely.
there are a lot of people
much.
who, and rightly so, because it can be your one stock
Correct.
portfolio.
Correct.
And so when you're saying it's a waste of time. What you're really saying is it's a waste of time if Lucas wants to pursue going and continually picking individual stocks and also continuing with this, I guess, portfolio of other thematic ETFs, because the overlap is just so large.
It is large. If you've got only 10 grand, when Lucas, you said that was your first one, so that makes perfect sense, right? Because it's your first one, it gives you all the diversification. And then as you start to build out the portfolio, it starts to lose a lot of its power because you're adding more stuff onto there, and then you're overlaying and you're overlapping. Generally with a lower balance, it's perfect idea because you've got 10 grand and then that's it. But if you've then sort of circling out, you're getting to 100,000 and plus, I think it's a waste of time. You could definitely do it yourself. And I think that with the IVV, VAU, VEQ, you're getting that country sort of sector side of things, which is really, really great. The hack has been doing very, very well for you as well. So keep up with that. But then, basically reweighting the portfolio to look at country, like an all-world one. But then obviously look at potentially gold. You know, we've got to have some gold in the portfolio, or some of the commodities, copper or uranium. Sort of then blend that out a little bit for those kinds of things. And with the cash component, dollar cost averaging is huge, and you've got to do that every month, right? Regular contribution strategy every month. You need to do that. That's something that I think you need to work on, and potentially finding the better ones to put it into. So IVV obviously is a really great start, and then you can sort of work your way out from there. And then some of these smaller ones, I don't know if it adds too much value, the Weebit Nano, INR, those kinds of things. What was your sort of reasoning behind those? Bit of a punt?
Yeah, those 2 or 3, I actually bought INR on both the American and Australian stock market. So that was the kind of lesson to myself. I wanted to see how they kind of compared to one another.
Yep.
I actually heard about both of those on the Equity Mates podcast. Yeah, I did my own research into those as well. And just the company at the time was pretty attractive, let's say, especially INOR, but it hasn't been doing too well lately. So I was wondering if you think I should just kind of sell those down, take the tax write-off, and then put them towards the ETFs.
They're smaller holdings, so you're probably not going to kill yourself by doing it. So I think that's not a bad idea to look at something like that. And just be careful with the thematic ETFs. Thematics do run well.
Yeah, what was your opinion on, I've got quite a large one in my, I think it makes up 14 or 15% of my portfolio. That's semi ETF. That obviously tracks the semiconductors, but it's run a little bit now.
Yeah, I think you're in the right space. I mean, semiconductors is certainly something that we've got to be mindful of, that it is going to continue to grow. Just be careful. I mean, the hack one is pretty good as well, but there's other ones that have really sort of fallen away. The ACDC or the lithium side of things, or the battery ones. So just be careful with those thematic ETFs. They can turn really, really quickly. And then all of a sudden you're sitting there going, hang on, I was up 10 grand, or I was up 10%, and now I'm down and I'm in a losing position. So be really careful with those thematics. They do swing around a fair bit.
Yeah, I think what we've learned over the journey is think of thematic ETFs the same way you think of stocks. Just like treat them the same, review them in the same cadence.
Absolutely.
Because sentiment can turn very quickly.
Very quickly, yeah.
So Dawesy, you touched on the cash, and you said you want Lucas to focus on dollar cost averaging, but I think when he was explaining his portfolio, like, he does have a dollar cost averaging strategy.
Yes.
For that core portfolio. So 13% of the portfolio in cash. Lucas might be making a call about stretched valuations in certain markets, and
or he's just a little bit lazy.
But what
one or the other.
What's your view on like an appropriate range of cash to have in the portfolio?
10% is fine, definitely. I mean, you want to have we call in the industry keeping your powder dry, right? So you've got a little bit of ammunition sitting on the sidelines if you do see something. And the market's had a good sort of 2 to 3% pullback of late. So there's opportunities and values starting to come back into the market. So it's still not there. So a 10% of value, cash is perfect. But regular contribution strategy, while the market's moving up, you're putting money in, and when the market's moving down, we don't learn about compounding interest at school, but that is fantastic compounding side of things. And if more people did that regular contribution every month instead of lump sum investing, there's a lot of history to say that that's got far better reach and far better side of things. So But getting your cash to work, I think it's important.
Yeah.
As long as it's sitting in your offset account while it's doing nothing, Lucas.
Yeah.
If you've just bought.
That's it. That's it.
Hard to beat that offset account. But anyway,
Yeah.
any closing thoughts, Dawesy or Lucas? Did you have any closing questions?
Yeah, Lucas, you got any questions?
I think that's all good for me. So, are you saying to sell down my Bitcoin? Is that what you're saying, Adam?
No, I'm not saying sell it down.
He's saying put the 10 grand in.
double down. No, look, it's volatile. We know that. And if you're comfortable with that volatility, then ride the wave. It's part of an investment portfolio, but just be careful. That's all it is. It's just too volatile for me.
And I think if it runs, just watch the weighting in the portfolio.
Yes.
Yeah.
Great call.
Yeah.
Great call.
Love it. Well, Lucas, a few things there for you to think about. I hope you got what you wanted out of today, and we certainly appreciate you submitting to the show. So thank you very much, and thank you, Dawesy.
Great to be here.
And if you would like to chat to Dawesy and the team or any of the other advisors in our network, head to equitymates.com/advice. Dawesy is also offering a portfolio health check. So you can go to him and his team and he'll give you a personalized investment portfolio review with expert guidance aligned to your goals. You'll also get a tailored statement of advice for $750 plus GST. So if you would like to get a professional portfolio review, head to equitymates.com/advice and we'll connect you.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.